how quickly will they look to realize some of those gains? Brian Hamilton, the chair of the enterprise software firm LifeSwitch, warning the share unlock reinforces some of the same concerns raised at the IPO, writing retail investors are being asked to take significantly more valuation risk than employees and early investors who receive shares at much lower prices. Brian joins us now for more. Brian, it's good to see you again. When we spoke on the day of the IPO, I remember you called it an extraordinary company that's extraordinarily overvalued. Brian, do you still believe that's the case?
I think so. You know, what a world we live in. Look at the company. They cut their losses in half. They doubled their revenue, doubled their customers, and their stock price went down, as you guys know, by about 10% yesterday, only on Wall Street, you know what I mean? But look, here's the big picture. These guys are still priced at 50 times trailing sales of last year. So they're doing well on an operating level, Jonathan, but they're still overpriced.
Let's talk about what they are doing, Brian, at an operating level. There are several businesses in there. And Lisa was talking about this earlier this week. How do you value this company? I'm sure we had that conversation at the time it went public.
Yeah.
Is it a telecommunication company? Is it going to be a growing neocloud firm? How do you look at it?
Yes, it's all of that. It's Elon Musk's joyride, you know what I mean? I love the guy. What a great entrepreneur, but still overvalued. And unpacking what the company does, good luck with that, you know what I mean? But here's the thing, guys, look at this. I will say, I have to back off my thing from a couple of months ago. As you guys know, the price has been battered. I'm not surprised by that. But at an operating level, they're doing great. It's, you know, here's the thing. It's a good company that's overvalued. It's not complicated. It's a mishmash, as you mentioned, of a bunch of things that Elon wants to do. Great entrepreneur, but still super risky. Now, one last thing. I listened to your last segment. It is true that I thought it was about 7%, by the way, by my calculation, but there's a bunch of people who have been in the company, they're employees, and they're unlocking. But I don't think that's going to be a material thing. I could be wrong.
At the same time, there's a larger question here about whether this is a SpaceX problem or whether this is an endemic problem with a lot of big tech companies that have solid businesses that are doing great things, but are also promising to spend trillions of dollars in CapEx for plans that have not been realized yet in a very competitive environment. At what point do you see some of that as becoming increasingly a liability? I'm thinking of Meta. I'm thinking of others that are trying to expand their definitions.
I have always promised myself, I will always say, I don't know when I don't know. And I don't know. But so I go to the fundamentals of the company. The losses have been cut in half, and that's great. And there's a ton of investment, and none of us on this planet know whether this stuff is going to pay off. I started early, guys, in AI. This is ancient history, 25 years ago, but we don't know. You were right. All these companies are investing big time in AI. I think they've got to do it. Will it pay off? We don't know. So that's why we drift back to how is this company doing with customer acquisition, profits, and the basics.
At a certain point, there's also this war for talent. We just saw it with Google yesterday. We clearly see it with SpaceX, with this belief that Elon Musk has a singularity and vision that can potentially propel the names higher and realize these dreams. I just wonder, do you think that some of the individual talent is being overvalued when you see things like these $100 million payouts for some of the AI specialists?
Yes. Yes. But again, this is an arms race, right? This happens in every great industry. Automobiles 100 years ago, you get all this growth, and what's happening, you're going to have fewer and fewer companies, and they're all fighting for talent. So these people are overpaid. There's no question. I'm one of them. You know, I was one of them. But that's the way it is. I mean, because, you know, that's the beautiful thing about tech, as you know, is it's intellectual property. So if they can get the best talent, there's a non-linear relationship with how that company will be valued.
Brian, if you ever want to be a co-host of this program when someone's on vacation, maybe when I'm out, you should jump in. Let us know when you're in New York, please. Brian Hamilton there.